you talked about some people who don't quite fall into the checklist of a bank. Let's give some examples around people that typically get turned down by a bank, and let's just talk about what, like the most, I guess, common, especially during COVID, examples where they come to someone like you, and it ends up being a really good move for them as far as their financial roadmap.
Hold up.
Okay, everyone, we are live here with Derek Serra from XMC, and this is actually another episode of our Consider This series where we talk to lenders who are dishing out or loaning out lots of money to lots of Canadians, but doing it in a way that helps you win and doing it in a way that helps you consider what this big loan you're inheriting actually means. So as you get prepared for a loan in the future, Derek's going to talk about things to consider, especially if you are looking at a B lender. And we'll talk all about what a B lender is quite shortly. First and foremost, Derek, welcome to the episode.
Well, Paul, thanks so much, and really appreciate the opportunity to join you and your fan base here or your followers in terms of talking about alternative lending and mortgages in general, but especially relevant at this point, given that this month is Financial Literacy Month.
Mm-hmm.
It's very important to continue to educate Canadians in terms of
Mm-hmm.
the overall literacy as it relates to finances, and in my world in particular, mortgages. And
Mm-hmm.
so great to be joining you today, and look forward to chatting a little bit about the mortgage world and in particular XMC.
I love it. Hey, great reminder around Financial Literacy Week. I totally forgot. And that's super, very, very timely, especially since I find like with personal finance, like what is that carrot or that pot of gold at the end of the rainbow? It's getting a house. So get your finances in order, not just because you need to, access a car loan or like save for Christmas gifts. It's you are thinking about that home at some point, right? So yeah, super timely. I appreciate that. Getting right into it. Look, a lot of people that I talk to on a daily basis, and I'm sure I'm not alone, they associate B lending with private lending and AKA super high fees, right? So can you address a bit of the stereotype that comes from this? And I guess how is XMC approaching lending from a way that helps people actually get ahead or transition properly throughout their home buyer journey, especially if they've gone to a bank and the bank just said, we can't take you?
Yeah, it's a great question, and again, I think that in the entire mortgage world, there are a variety of lenders, and so you've got kind of and at XMC we do two things. We do alternative lending. We also do insured lending,
Right,
which would be the opposite end of the spectrum on the insured side or the A side. And so
right.
again, while we offer both, I think today we're going to talk primarily about the alternative space.
Hmm.
And just a few things to keep in mind that it's as we continue to talk to clients and survey clients, whether it
Hmm.
be existing Canadians or new
Hmm.
immigrants, the dream of home ownership, I think, continues to be high up on the list of many Canadians.
100%.
Um, and so again, it's about how you can help Canadians achieve that dream. And so where clients qualify on the insured side or on the conventional side, which might be a bank mortgage, should they fall a little outside those guidelines,
Hmm.
there is the entire alternative space which is available to clients. Which allows for a bit more flexibility than
Hmm.
is in the conventional or insured space,
Hmm.
and the rates are a touch higher as it relates to the additional risk that would come into that space. But
Correct.
ultimately, if you look at the average Canadian and the average real estate, it's always been a good investment. You can go back as far as you'd like to have bought real estate in the Canadian market. And so I
Hmm.
think that continuing to find ways to help Canadians enter into that space, whether it be from a home buying perspective or alternatively, leveraging the equity they have in their home to pay out other um,
Hmm.
higher risk or higher rate products are also really important.
Hmm. The debt
The two important
consolidation.
things that
Mm.
we offer through alternative lending. And so again, an alternative rate on a day like today could be as low as 3 and potentially as high as in the mid 4 to high 5
Mm-hmm.
range.
Mm-hmm.
Again, very reasonable rates if you consider what you'd be paying otherwise on a credit card, or potentially, another high interest rate vehicle that you could use in terms of leveraging the equity in your home to pay out that debt. And
Or
also,
opportunity cost, right? If you're waiting, if you can't hit the bank, you're paying someone else's mortgage called $2,000 a month, then the property is appreciating 3% a year. And let's face it, COVID has really not done much to soften prices at the time of this recording. That's a whole other thing too. That like if you wait, it's expensive to wait. And if you take the delta of like a 3% with a B lender, and including some of the lender fees with whatever, let's say a 1.9 for a $500,000 mortgage, I mean, the amount you save there waiting for the A lender or the bank versus the opportunity cost of paying rent, opportunity cost, and even maybe debt consolidation, that's a whole other thing. Like when you look at the numbers, B lending can make a lot of sense.
it really does. And it's important to best understand. And so again, when you're working with a company like XMC that is a federally regulated
Mm-hmm.
entity, again, we very much follow the B20 guidelines as it relates to alternative lending. And so that is the very big distinction and difference between working with a company like XMC versus a private mortgage. We do
And
very
quick on that,
much.
sorry. With for people who may not remember what exactly the stress is, without getting too much into that, when you say federally regulated, let's dig in a little more into that. The question I get a lot, people say, are these people legit? Right? So federally regulated, hold on, what if this XMC company goes bankrupt? Then what happens to my loan? And I actually don't usually have a good answer except for saying they're federally regulated. I'm pretty sure if they went belly under for whatever reason, they get consolidated with a bigger bank and or the government would bail them out. But like, can you actually address what you mean by federally regulated? And also to the point of when people say, what if they go belly up? What then? Those are common things I hear. Would love to get your answer on that.
Yeah, and so ultimately, we're a federally regulated financial institution, meaning that we have to follow all the Canadian guidelines as it relates to being a federally regulated institution in terms of our capital requirements and otherwise. This might be a little bit of a path that we don't want to spend too much time
Sure,
on,
sure.
because ultimately, I think my advice to your viewers here would be to be working specifically with a mortgage broker
Right.
on your journey of looking to be either pre-approved or approved for either your purchase or your refinance transaction. The
Sure.
reason for that is that someone like Paul
Mhm.
has access to lenders who you may not have otherwise heard of,
Right.
that are financial institutions, regulated financial institutions in the
Mhm.
Canadian landscape, and ultimately, our audience is that of mortgage brokers. And so while we do not necessarily have banks on every street corner, we don't
Right.
sponsor the Olympics, we don't sponsor a
Yeah.
major
Sure.
hockey arena.
Not yet.
Uh, not well. Ultimately, I think that's in part why we can do things for Canadians that others can't,
Sure.
and in certain cases we can offer great solutions at very reasonable pricing for Canadians that potentially others can't. And so again, it's this idea of working within the alternative space, but still working with a federally regulated lender that you can trust and understand, that we do have the client's best interest at heart in our
Mhm.
transactions.
And you also have, I mean, a fair amount of investors and capital where people shouldn't be worried about you, you know, being shady or potentially not being able to help them in the future.
Yeah,
Like just to address
yeah.
that.
I would just say to be a federally regulated lender,
Mhm.
we would be in line with the banks and others. And so,
Mhm.
yes, absolutely, the trust. I think you can have a comfort level that this is a solid organization and
Mhm.
one that's deep rooted in is being an expert in the mortgage industry. Again, the other neat thing about dealing with a company like XMC is we only do mortgages, and so we are
Mhm.
experts in this particular field, where you deal with other potential financial institutions that have many other lending products that they
True.
offer. We only sell mortgages at XMC, and we're experts at it
Mhm.
across the country.
Yeah, and you're very focused on that. So yeah, I tell people a lot around that is yes, you people you're talking to, all they do is mortgages. People with banks, for example, nothing against them. They're pretty spread thin, right? So there is definitely a distinction there. Transitioning, Derek, a little bit into examples, right? People watching this are kind of like maybe feeling a little bit lost, like, all right, you guys seem legit, but like I just got turned down by a bank. So, and it's COVID, right? So you talked about some people who don't quite fall into the checklist of a bank. Let's give some examples around people that typically get turned down by a bank. And let's just talk about like the most, I guess, common, especially during COVID, examples where they come to someone like you and it ends up being a really good move for them as far as their financial roadmap and access to
Sure. I think that's
yeah.
a great, that's a great segue into talking about the alternative space. And I'd share with you, there are primarily four kind of clients that come to the alternative space. Um, the first one being clients that have bruised credit. And
Okay.
so, the banks have a particular threshold in terms of credit requirements. And
Typically
as an
about
alternative,
680 or 600, I think is the bare minimum, right?
yeah, typically about 680, maybe between 650 to 680.
That's been going up
Uh,
recently too.
and it has. And so I think what's critical for someone who's potentially has some bruised credit, and again, our where it usually lands for someone to have experienced some bruised credit is potentially they've had a disruption in their employment, they've
Sure.
had some kind of illness, either themselves or their families, or there's potentially been a death in the family.
Mm,
And one of those three things has happened, which has created some level of issue with their credit. Divorce
mhm.
is another one
Yeah,
that
of
can
course.
impact people's credit as they're parting ways. And so what this does in an alternative lender is we do have the ability to work with clients with a beacon as low as 475.
Right.
And so we'll help you to repair. We'll help to understand what the story is, how
Of
you
course.
got where you are, and then help you to move forward.
So
And so
important.
in these particular cases, if it's divorce, for example, that's led a Canadian to have a potential lower beacon score, but they do still want to move on. They want to find a home for their families to move forward. In those cases, again, when we talked earlier about the offsetting, upside of the cost,
Mhm.
there's a great example of the priority for that particular client would be to reestablish their credit, reestablish their home for their families,
Mhm.
and moving into an alternative deal while they're repairing their credit is a great solution. And then potentially there afterwards, should they be able to repair their credit up to the levels of
Mhm.
650 and
Mhm.
higher, they
Mhm.
could conceivably, and then you'd maybe have a conversation with Paul again
Mhm.
and conceivably find yourself back in an A solution. So it may be a temporary fix in entertaining a B solution, but again, these are oftentimes professionals, and for whatever reason, as we've outlined, they've had a little
Mhm.
bump in their credit. So that would be one of the key type of clients
Yeah, and by the
that
way, on
land in
that
the
note,
space.
two notes that came into mind. One is looking at your rates right now for a 5-year fix, you are way lower than most banks. So I don't think we don't have to plug it too much right now, but you guys are very competitive in the A space. And secondly, around Bruce credit, what about thin credit? I talk to a lot of entrepreneurs now. They do all of their expenses on their business account. So their credit score is too thin. There's nothing on there. And I've seen a lot of people who either have zero, like I pull the credit score, no credit score, or super low. And I find that sometimes it's just as bad to not actually use credit and have a thin score than actually have a credit issue. I don't know if you want to at all touch on that, but I'm seeing that a lot, especially with people that are self-employed.
Yeah, I would just first say that obviously on the insured side, which is the A side,
Yeah,
again, I
same.
highly recommend for any clients that are looking at financing to speak to a mortgage broker,
Yeah.
because a mortgage broker like Paul will have access to a variety of lenders that you may not have heard of, and it doesn't mean that the lenders are not. Um, well respected and well regarded. They just
Sure.
might not be on every street corner.
Of
And
course.
so ultimately, working with someone like Paul you could wind up in an XMC solution on the A side
Hmm.
and be surprised
Yeah.
pleasantly surprised at your very attractive interest rate. But
Totally.
segueing back to the B side,
Yeah.
yes, I think it's critical that people spend a lot of time understanding what goes into their individual credit score. And the active use and proper use of
Hmm.
credit is a critical piece. And so
Hmm.
thin credit or bruised credit are examples where people could lend in the B space. Another one would be just extended ratios. The
Right.
banks have a particular number that they'll lend up to as a total debt servicing of your income.
So debt to
And in the
income is that
alternative,
balance. Yes, that's a
it's
really
that
important.
balance. And on
Yes.
the alternative side, we have a little bit of a higher threshold. And so again, you could very well be gainfully employed and a professional. You
Hmm.
could be a variety of different employers, police officer, teacher, fireman, so
Sure.
many other folks. But you maybe have
Self-employed.
co-signed for a well, we'll talk about self-employed in a
Yeah.
second. But
Yeah.
typical employed
Sure.
individual,
Sure.
but you may have had to co-sign for your child to help them with their mortgage, or
Mm,
potentially help them with a car payment, or whatever it might be, or you've taken on some additional debt to support a family member, and your
right.
total debt servicing ratio now eclipses that which is allowed within the bank world. Again, that's not a hard stop. That just means you might wind up with an alternative solution.
Right.
And that might, again, be a short-term solution for you until you otherwise, shore up the other debt that you've
Of course.
helped
Huge.
a family member out with, or it might be a longer-term solution for you. But again, extended ratios. Again, another example of that would be clients that own a rental property. They
Hmm.
might have multiple owners on a rental property,
Right.
where when you're lending to those who already have a rental property, if you're buying now your own property and you're not buying it with your partner on the rental property, we would use the 100% of the debt of the rental property, but only 50% of the income. And so that again might impact your overall
Huge.
uh, debt carrying ratio. So again, it might be a scenario where a client is in the alternative space for a short time to sort that out. So
Totally.
many solutions
Totally.
available to Canadians on the alternative side that help with either extended ratios,
Huge.
rental,
Rental,
or
you guys are
bruised
very good
credit.
for. Yeah.
Yeah, and
Rental,
these
you
are
guys
great
have a good offset
solutions.
for sure.
They help Canadians move forward.